Can everyone hear me? Can you like put
Yes.
these up? All right. Hi, everyone. I'm Sun. I'm a workshop officer and leading the research project on applying data science to stock trading. Welcome to our second meeting of the winter quarter. I hope everyone's doing well, and thank you for showing up today. So before we start, I want to talk about the stock market and the role of data science. So stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. The price and value of stock change depending on the data that are available to the public. There's a hypothesis called efficient market hypothesis, and it states that share prices reflect all information. With data science and machine learning, we're seeing more quantitative approaches to stock trading. Do you guys have any question on that? All right, I'll just proceed to the next slide. So what is a stock? A stock is a security that represents the ownership of a fraction of a corporation. It is basically a piece of a company. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. And units of stock are called shares. You can trade a stock through the stock market, that the collection of exchanges and other venues where the buying, selling, and issuance of shares of publicly held companies take place. And the guy that's in the picture is called Peter Lynch. He's a prominent investor, and he famously said, behind every stock, there is a company, and you have to find out what it's doing. So there's the two approaches. So value and growth have divided investing for the last 50 years. A value stock is a security trading at a lower price than what the company's performance may otherwise indicate. The recognition of a value stock comes from analyzing the true worth of a company and finding out how much it is currently valued at in the market. So, for example, if a company is worth $100 million and its market cap in the stock market indicates that it's $80 million, there's an error basically. So you can find the value stock that way. However, a growth stock often depends on its long-term potential. Most growth stocks tend to be newer companies with innovative products that are expected to make a big impact on the market in the future. Do you guys have any questions on what a value stock and what a growth stock is? You guys can ask in the chat.
I got a question.
Sure.
So like I'm just like curious, is it like investing in growth stock just like more risky than investing in like value stocks, or is it just like different methods?
I would say they're just different methods, but I personally believe that growth stocks can be more risky. Just depends on what stock it is. So for example, 20 years ago, Apple and Amazon are still growth stocks, but 20 years ago, they were like considered growth stocks, which was risk involved. And like Walmart was a value stock. And if you look at their performances, Apple and Amazon like outperformed Walmart, but there's always a risk involved when you trade stocks. So I would just say they're just two different methods.
I see. Thank you.
No problem. And metrics and value traps. So metrics are measures of quantitative assessment commonly used for assessing, comparing, and tracking performance or production. Metrics such as price to earnings, price to book, debt to equity, and price over earnings to growth can help us discover undervalued stocks. And however, low valuation parameters do not always mean that the stock is underpriced or undervalued. There's value traps that may look very cheap on the paper, but in fact, it could be because the business is failing simply. And what's more profitable between growth and value? So growth stocks are expected to outperform the overall market over time because of their future potential. And value stocks are thought to trade below what they are really worth and will thus theoretically provide a superior return. However, last decade, the growth stocks outperformed the value stocks by far. But when you look to the individual stocks, the result may differ greatly because you could invest in a value stock and have that can outperform like many growth stocks. However, when you compare these two categories during the last decade or last 5 years in this graph, you can see that growth stocks have outperformed the value stocks by far. But my belief is that the two should not be viewed as mutually exclusive. And what's really important is understanding the gap between the true worth of a company and its current price that may not be based on its financials or technical indicators. Do you guys have any question on that? All right, I'll get to the next slide. Fundamental and momentum. So fundamentals are information and topics that help us learn more about an asset, such as profitability, revenue, assets, liabilities, and growth potential. And fundamentals provide a method to set the financial value of a company, security, or currency. And momentum is the speed or velocity of price changes. Momentum shows the rate of change in price movement over a period of time to help investors determine the strength of a trend. Do you guys have any question on fundamental or momentum? All right, intrinsic value and expectation. So value stocks are often driven by fundamental factors, and growth stocks are often driven by momentum. And intrinsic value is a measure of what an asset is worth. This measure is arrived at by means of an objective calculation or complex financial model, rather than using the currently trading market price of that asset. And on the left, Warren Buffett, the investing guru, is known for applying intrinsic value to his investing approach. However, with the technological advancement today, innovations are disrupting the world and changing it rapidly. So Expectation plays a role when it drives stock prices up and down. So on the right, Kathy Wood, a prominent portfolio manager of ARK Invest, has been very vocal about how innovation can change the world. And price movements. Price movements are often measured by these four measures: trend, momentum, volatility, and volume. We can see the trend by simply looking at the moving averages and Bollinger Bands. The momentum is by figuring out whether the stock is bullish or bearish. And volatility by dispersion of returns, and volume by looking at whether it is increasing or decreasing. Top-down investing involves looking at big picture economic factors to make investment decisions, while bottom-up investing looks at company-specific fundamentals like financials, supply and demand, and the kinds of goods and services offered by a company. It looks at GDP, interest rate, inflation, and commodity prices. And bottom-up approach is more about examining an individual stock. It involves analyzing the fundamentals of a stock rather than the economy as a whole. Do y'all have any question? All right, I'll get to the next slide. And how do news headlines move the prices? So headlines often spark investor fear or greed, providing a snapshot of short-term market trends. And by studying the reactions, we can actually anticipate how the stock market will react to the headlines and predict the price movements following that. So this chart is from the website called FinViz. And when you go to FinViz and access an individual stocks page, you can see the news headlines below the chart and how much they have affected the stock price. So I have a case about how the news headlines affect the stock price. So this stock is called IonQ. The quantum computing stock IonQ surged in November 2021. And I believe the stock price went up like 4 or 5 times in 1 month. And the news headlines affected its performance so much. Like in the year 2021, there have been many news that were about quantum computing, and some of the news drove the stock price of ARQQ, another quantum computing stock, to go up in October 2021. And by looking at the reactions to ARQQ news and Google's quantum computer Sycamore news, we could have anticipated IonQ's surge. Do you guys have any questions specifically on IonQ? All right, I'll get to the next slide. So how to predict the earnings? Stock prices often surge when the company beats its earnings estimates. So for example, if Goldman Sachs expects Crocs to generate $100 million in profit in 1 quarter, but if Crocs actually generates 200 million profit that quarter, the stock price is going to surge. And with enough research, we can predict the earnings using data science and applied analytics. So due to the pandemic, people have spent a lot more time at home, and the Google Trends showed that the interest in Crocs has surged since the year 2020. It was kind of easy to assume or infer that as people stay home more, the sales of Crocs would go up. The stock price surged when the Crocs announced its earnings and beat the estimates on July 22nd, 2021 and April 27th, 2021. Do you guys have any specific question on Crocs or how it beat its earnings estimates? All right, so that was it for me. And these are the useful links related to stock trading and data science. And below we have Applied Analytics Bets Discord. So we're creating a research project within the club that analyzes what factors are affecting the movement of stock prices and how to use data science to predict it possibly. And please let me know if anyone has ideas. And if you could join the Discord chat, please write your name and email down below so you can join the project. Thanks for coming to the meeting today.
Oh wait, we actually have an announcement. Yeah. Let's see.
My fault.
Can we go to the page about Clean Tech Open?
Next slide, I think, after relevant links. Sorry, after this one. It should be between projected schedule and closing remarks. There it is, perfect. Okay. Hello, everybody. I'd just like to talk about a quick volunteering opportunity. So first off, I'd like to talk, so Clean Tech Open. So I'd like to briefly talk about Clean Tech Open. This is a venture capital accelerator for clean energy companies. Particularly what this opportunity is, this is an opportunity for those who are interested in helping evaluate clean technology startups and doing due diligence on their business model, financials, and technology and product validation. So essentially what you're doing is you could, in this opportunity, this project, you'd be able to help this accelerator essentially score and evaluate startups in various ways and determine their feasibility and their executive summary, and particularly working with that startup data, understanding what startups are worth looking into, etc. So this is a great opportunity for individuals who want that intensive exposure to startup due diligence, want a hands-on experience with the opportunities and challenges of a sizable data science project. Also for candidates who are interested in clean tech, this particular idea. And also for those who are potentially want something particularly for the resume, this is some good volunteering or interning experience for those who would potentially want to put this on their resume. Highly recommended. I believe Ishan Allen and I and a few others in the club have worked with Clean Tech Open, and it was a really great experience where we learned a lot. So this is just the brief overview. If this is something you want to know, you want a little more information about, you can either reach out to me, Alan, or Ishan, or if there's something you want to hear more about, if this is something that can interest you, Josh Shine is the person who heads Clean Tech Open, and he will be having an informational session on Zoom at 3 to 4 p.m. on Friday. If this is something you want to attend, please email uwappliedanalytics@gmail.com to learn more. If you do that, I will be able to respond back and provide you with the Zoom or Google Calendar link, so you can join that informational session where he'll talk more about the actual project itself, the work, and the different experiences provided by this. But it's an awesome opportunity, and if you're looking to really bolster your resume, I would definitely suggest getting into the Clean Tech Open. But if you, however, if you cannot attend the 3 to 4 p.m. time commitment on Friday, you can still email me, the uwappliedanalytics@gmail. You can still email us, and we can coordinate or figure out another alternative time where you can be able to meet with Josh Shine, who will give further information and get people on board with this project. So yeah, Zoom link is also in Discord. Awesome. Thank you. Thank you, Sean. Thank you, Alan. Yeah, it's not paid, volunteering. It is a volunteering intern opportunity, but this is a great opportunity. And yeah, if anyone is interested, anyone wants to stick around and ask more questions about this, we're open to as well. If not, you can just email uwappliedanalytics possibly as soon as you can, since the meeting is on Friday. We'd hopefully like to know within the next within by today or tomorrow if you guys can attend, so I can let Josh know. But yeah, any questions about that? Any clarifications needed? Anyone can just pop up. Any questions? Okay, so yeah, just to double check, just to say, you have the information, you can copy paste the chat information, or you can email us and we'll provide you with more information. But yeah, a lot of our club members have done it. It's a great opportunity, and we really hope to see you guys at the informational session with Josh. But if there aren't any questions, then we can go further. We can go ahead past this. Thank you, everyone.